Morning, everyone. Just drop a 1 in the comment or drop a fire in the comment and let me know that my audio is coming through clearly. It's a whole new trading week and we're gonna see what exactly we can accomplish for this week and see just how to look and see how the market has been playing as it relates to our overall forecast. So let me know if my audio is coming through. Let me know if you're all able to see my screen. Awesome, awesome. Right, and like I said, guys, if you have any questions, feel free to drop them in the comments. If you have a pair that you would want me to look at, also drop that in the comment as well, so I can look at that as I once I've completed my overall forecast. Yes, Mr. Patterson. I was confident in it too, but I just wanted to get your overall feedback. And it's the first one that we'll actually go through. So that's what we're looking at is wave 5 being completed. Euro USD, naturally candid, Euro USD and GDP. Definitely we'll be looking at Euro USD this morning as well. All right, so we'll be looking at Euro USD. We'll also be looking at okay, Euro GDP. I'll look at that one for you. All right, GJ, we'll be looking at that. So we'll be going through Euro USD, pound yen, and at the end I'll look at Euro GDP for you as well. All right, so to get things started, let us start by looking at USD CAD. So when we look at the market here, based on the current price action, remember that last week I had said that what we have completing here is we had two waves completed out of the market, or I should say one, right? Where we had a clear impulsive move up. Right now, if we should just take this over, to the 4-hour time frame. Thank you, Shakir. Yeah, man, always, brother. Good to see you here as well, man. USD CAD based on the 4-hour time frame. Now, over here just looks a bit messy, but we were able to see that the market was in an overall downtrend coming in, and we had a ending diagonal finishing off wave 5 out of this degree here, right? Completed the correction. Now, once the market give you a 5-wave cycle, we should be looking at a correctional move to the upside. Now, the correction may play out in different form, right? Now, in this case here, we had a 5-wave move up to complete wave 1. Then we also have a corrective structure in here. Now, if we had this correction and we call that wave 2 at the time, right, and I still left the 2 here just as a reference point. But if you notice, we have 1, 2, 3 waves up. There, in any impulsive move, we must have a 5-wave structure rather than a 3. So getting this 3-wave structure in here simply told me that this is not an impulsive move up, but instead a higher part of a correction. So that's why I labeled here as A, and this to be a smaller wave A. As it turned out, the overall structure was looking more like a triangle, right? So when we assess the situation, we saw that this overall move in here indeed looked like a triangle. And based on a triangular pattern, how it forms out is we need 5 waves within that triangle A, B, C, D, E, and each leg is generally taken in terms of a 3-wave pattern. So in here, we have 1, 2, 3. That's the first pattern up. Then we have 1, 2, 3. That's the second. And we have 1, 2, 3. Third. 1, 2, 3 for the fourth, and 1, 2, 3, completing the 5th. So if we pull that apart, we would have able to see where we have that full 5-wave structure in that overall triangle, each having its own 3 subwave, and we could draw it in like this. And this is pretty much a bearish triangle pattern that is forming. So when we look at that overall structure, we're able now to see where a move lower would have been anticipated. And once we get that move lower, that would have completed wave C. Wave C is generally operating in a 5-wave structure as well, 5-wave impulsive move. And to get that wave C in, we were able to label it and to count in 1, 2, wave 3, 4, and wave 5 down here. Right now, there are other finer details in here that you would have helped to showcase each leg being a subwave of also 5 individual waves, right? And that's what we're really looking at. So now that we're here, we can say that this level here, completing wave C, let's say that we have now completed the second wave out of the market. Now, what do we need to complete that second wave out of the market now? Right? Or for us to consider this level completed, that's what I should have said. We need to see 5 waves going up. So we need to see a structure 1, 2, 3, 4, 5. We need to see a 5-wave structure coming in. And once we get that 5-wave structure coming in now, then now we can say that this level is potentially completed and we are looking to start wave 3. Right? So if we're looking to start wave 3, then what we would have here is we'd be looking at this impulsive move 1, 2, 3, 4, 5. Then we would need to see a correction of A, B, C. And if we get that in, then we now know that we are in a long position to get back up to start buying USD CAD. So for this, at this stage, I would not be rushing to say that I would be buying this, but instead I'll be waiting to see how the market reacts to this entire structure. Will we get another movement lower? Because certainly if we find where price is pushing lower, let's say that we have the market turn here and we get this to go lower, then we would have simply have to identify this entire structure as wave 2 still unfolding. So we would have this now labeled as an X wave and A, B, C coming in to give you another 5-wave structure. Right? So for now, we would have hit target point. We are currently out of our position in USD CAD, and we're simply waiting now for the market to move higher. One point of reference for us would be if price get back above this level. So we can have this level in here now as our confirmed buy. So again, this is a pretty good distance for us to be waiting, but it's better for us to have this in simply because if the market should give us any strong impulsive move up, we understand exactly the position that we're in, right? But we are just simply waiting now to see just how this overall structure here would unfold. So again, this zone is now our area of reference, right? And we have already highlighted that as our area of interest. So we're just simply holding on to our hands now and wait to see just how this market will unfold, right? So ideally, we'll be looking at potential market moving higher, or we could get movement lower. So that's pretty much where we are right now for USD CAD. It's all about waiting for the market to unfold and tell us exactly what it decides to do. Where Euro USD is concerned, what I would like to show you guys is, let's take it from the 4-hour time frame first. And from the 4-hour perspective, we were seeing where the market came out of this strong impulsive move to the upside, finishing off with a 5th wave cycle, right? As we have wave A, wave 4 here, and the market would have completed its 5-wave cycle up to finish off wave 5. Now, after every impulse, the market needs a correct. So again, we are having a correction coming into the market here. We have A, B, C. And once we have a correction that's completed, the main trend would resume. And that main trend would be looking at 1, 2, 3, 4, 5. That's ideally what we would want to see, right? The next thing we want to look at is if we are unable to see a 5 impulsive move up in terms of what is taking place here. We're only getting 3 waves here. So if we're looking at this entire structure and we're only getting 3 waves in, and this is on the 4-hour time frame, the area of interest now for us is to observe this B wave structure here. Should the market then overall, as we completed a 5-wave structure, we have completed a 5-wave move lower, right, in terms of A, B, C corrective. So is to simply observe to see how well what is we're getting here. Below this wave B. Sorry about that, guys. I realized that I just had some internet issues. I lost connection there. So just drop a comment or a fire or a 1 or an emoji, something in the chat to let me know that my audio is back and if you're able to see my chart now. Right, I should be on the Euro USD 4-hour time frame. So let me know if you're able to see. All right. Okay, so from wave B structure. Okay, sure, not a problem. All right, so looking at the overall structure of the market here, as I was saying, we have 5 waves completed to the upside, right? And we are looking now at the market completing a 3-wave structure down. A, B, C. From there, we would be looking for two things, because we would have had a three-wave correction. Right? Based on how the market unfolds, we have 1, 2, 3, 4, 5 waves up, 3 waves down. Right? We have 5 waves up, we're now looking at 3 waves down. Because this is coming off a major uptrend, pretty much from the daily time frame, as we can see. From the daily time frame, this is what we would have had, right? So the movement down could simply mean that it's a first leg of a larger extension. So we could literally have this here acting as wave 1 down in terms of A. We'll get another one in to give us B, and another structure down to give you C. This is what you'll be seeing from the daily time frame. And that's one of the reasons why top-down analysis is so important when you're doing your overall trading. So take it back to the 4-hour time frame and to explain what we're seeing here. The market has completed a 3-wave cycle. So from that 3-wave cycle, what do we need to see? We need to see another impulsive move coming out. But instead, what are we getting? We have 1, 2, 3. As it stands now, this is not an impulsive move. This is just another 3-wave correction. So if this is just a 3-wave correction, it simply means that the overall correction of the market from here to here is still unfolding. And this now would be considered to be the first impulse. Then we're looking for correction. Then we're looking for another impulse. Right? There are a couple of things that we utilize now in terms of understanding this overall price action. And one of which is identifying the Fibonacci relationship between how the market moves, right, in terms of the price movement. Now, if we should, let me just delete this and reapply it. Take in the information from this high to where the market created this low. We would have had the 50% zone and the 61.8 level being our area of interest. That would also coincide with our B wave. When the market is resuming its overall trend, we need to get price action above the B wave, right? Or we need to get an impulsive move above that area. What we are seeing now is price action is currently respecting this 38 zone here, which is also acting as market support and resistance. So we have a support and resistance level coming in here. Right, as you can see, this is an area where the market has respected quite often. We have a lot of price action building up there. We have some here, have a few there, and we certainly got some at that stage as well. So with that being said, this area is also an area of interest for us. So we are simply going to observe this overall price action within the market here. But what we want to see is any break below this low, right? Then we can anticipate for the overall trend to continue lower, and for the correction where we can say that the correction is still in place, right? Because again, in this movement here, A, B, C, that's a 3-wave impulsive move up. So if we take that now to the 1-hour time frame, just to understand exactly what is taking place there, we can see it even clearly that even on the 1-hour time frame, this move here was not an impulsive move, right? This now is clear that this is also a correction, and it's also here where we're getting another movement up. So C wave is generally the impulsive move within the market. So if we identify what is taking place here, and we can say that this is certainly not an impulsive move. So we can label this as is A, B. So let's label it for you, just so that you guys can see exactly what is taking place. All right, we have A, so we have 1, 2, 3, 4, 5 coming up there. Now, if this is the case, and we would have had wave 1, 2, 3, 4, and you have another movement in here, 8, 5, 6, 7. So you'd have had 7 moves in there. Because I want you guys to look at that red candle right in the midst of all of that price action, right? And all we're simply monitoring is just the movement of price, and every detail in price counts. So we have 7 moves up. And if we have 7 moves up, we understand that 7 moves never indicate a impulse. Impulsive moves are generally in 5, 9, 13, and so on and so forth. Increments of 4. All right. So the best way that we could count this structure is to have here as A, this being B, and this level here giving you C. And in that sense, you would have had now wave 1, 2, 3, 4, 5, taking into consideration this little candle right in here as a part of price action. In any 5-wave impulse, that's in Dre asking me, please explain the rules are violated in the chart. Oh, I'm not sure if I will be able to get a video done, but what I can do, like I said, if you're part of the trading room, I share a lot of educational material there on a day-to-day basis, right? In terms of those who are part of the exclusive trading room. So what I would say, I would recommend reaching out to me afterwards, and we can go through that to see how you can also gain access there. Because I have a lot of videos there where I explain how the market moves. And also in terms, if you look on my Instagram channel, WaveFX Academy on Instagram, there's also another video there explaining the basic principles of Elliott wave and the rules that are needed in terms of a impulsive move. Right, and I've also went over a couple of them here to say that wave 4 cannot enter into the territory of wave 1. And so that's one of the rules. Right, so you can definitely check out the channels, and there's a lot of free content there. And if you want some special attention, then you can also reach out to me and see how you can gain access to the exclusive trading room. All right. So in this situation here, we'd have to label this as A wave. Up, we have the movement coming down, B, and here we now have 1, 2, and you have this could classify as wave 3, and this being 4, and here being 5. That's one scenario as it stands now. Wave 4 did not enter into the territory of wave 1. So this is still valid as a 3-wave move up. What we have to look at now is to see if wave 3 is the shortest. And in any wave count, wave 3 can never be the shortest wave. So if we have this as wave 1, we already know that it is longer here than wave 3. And if you look at this here, wave 5 is also longer. So we now know that this level in here is certainly not wave 3, as it is the shortest of these 5 waves up. So what we have to do now is to look to say that here is not wave 3, but instead a new count is taking place, where this is wave 1, 2, 3, 4, and we're looking now for 5 to come in to give us the wave 3 that we needed of the lower degree. The higher degree, I should say, sorry. All right, and then now we can have wave 4 finishing off anywhere around here, and then wave 5 coming in. And another guideline that you can also look at is the fact that the market generally unfolds in a channel. Wave A is equal to wave C. This level here is equal to wave C here. Then what we have, it's simply label this as A, C. All right, waiting now to see how this would actually unfold. What I would say is this level Okay, guys, my apologies again for that. And just drop a 1 again in the comments and let me know that your audio is coming through and also video is coming through fine for you as well. All right, so it seems like we're getting my audio and visual. All right, so in this situation here, I was saying, let's see if we can actually speed through things and hopefully we don't have another interruption. All right, so in this situation here, you can say that what we're simply looking at is observing the market to see if we would get price to confirm our indication or our bias here. To say that once we get price below wave B, then we can look for the selling price action to continue. And that's how I would simply be looking at. And if that's the case, where we're anticipating more selling price action, then the area for us to be looking at would be wave 4 of that lesser degree, and would certainly be targeting anywhere within here, any support zone within this area. All right, the next way that we can utilize, or the next tool that we can utilize to give us an idea as to the level to target, sorry, 4-hour time frame should be using for this, is to get an extension. The market corrects in here, Again, this will be W, X, and we're looking for Y to come in. And that would be around about the 100% zone. So this now becomes our target level. And it's just an area now for us to observe and monitor as the market moves through price. And you're finding that now that it's also coinciding right back with the level that I identified here, being wave 2 or within wave 4 of the lesser degree. All right, so we can take that in. And this is what we would have. So we, Euro USD, I'll definitely be looking at that short for the coming week. Worst case, we can get any movement in this higher here, and then we can start looking for sells. All right, or if we get a break below this level, then that's also ideal. Pound USD, similar situation unfolding here, but if we should take this to the 4-hour time frame, I would just like to share something with you guys as well. Let's say that how this market has been unfolding is we had an ending diagonal taking place on the 4-hour time frame, right? And all we're simply looking at now is we would have completed 1, 2, 3, 4, and we're looking now for 5 waves in. Out of those 5 waves in that we're looking at, in an ending diagonal, each leg is generally a 3-wave subwave, right? Breaks down in 3 waves. It's not an impulsive move, but it is still a motive wave. Motive simply meaning that it would move along the trend. Right, so in here, we would be looking at A, B, C. For all ending diagonals, this is the structure that we're looking at. 1, 2, 3, give you A, or 1, A, B, C, 2, A, B, C, give you 3, A, B, C, give you 4, A, B, C, giving you 5. And this is generally how an ending diagonal would shape. Let's just make this a little bit higher. And that's ideally what you would want to see. So we have a similar situation now that's taking shape on pound USD. It's pretty much on majority of the pound pairs, but in particular pound USD and pound yen. So all we're simply doing now is monitoring this final impulsive move up, or this final motive wave here to finish off wave 5, right? Now, in this situation, we clearly see where we have A wave completed, we have the B wave in here, and all we're simply doing now is waiting for the C wave to come in. That C wave could take the shape, C waves are generally impulsive, which would mean they have a 5-wave structure. 1, 2, 3, 4, 5, right? As it stands now, we have 1, 2, 3. We have price building up in here, so we can say that's potentially a correction, and we should anticipate another move higher to complete wave 5. We don't know as yet, but all we're doing is simply monitoring this overall price action. If price gets below this zone here, then we can identify here as the top of the market and also wave C, where that now would take place in an ABC move. And would simply need to just observe and identify the pattern that the market used to finish off this overall structure. Right? As it is now, we can only make a forecast, but we need the price to fill in order to give us confirmation on what we're really thinking or anticipating. Right? So at this stage now, we simply are waiting for the market to break beneath this low, and then we can join the selling price action. So I would not be looking to place a trade on USD as yet, simply waiting now for the market to get back below those price areas. All right, so that's ideally what I'll be anticipating for pound. When we look at pound yen, like I said, it's a similar situation that's unfolding there. Where we have an ending diagonal that's taking shape, we can look to say that we have potentially completed wave 4 of that ending diagonal. And we're now looking for wave 5 to finish off. This entire structure could be dissected into 3 parts as well, where we have wave A finishing off in there, wave B acting as a triangular pattern, and we're looking now at wave C to come in there. That could very well be the case. However, I'm not too sold on this structure as yet. All right, so you could also look at it as potentially another ending diagonal taking shape in here. All right, where this market would have potentially expanded. All right, so, but I'm not too sold with these analysis as yet. So what I'll be simply looking at, I've overall anticipated or look at this entire movement here to be a wave. So we're looking now at wave B taking shape, and we'll be looking for another impulsive move higher to complete wave C. Right? So that's what I would actually be looking at in terms of my overall analysis for pound yen. So what would invalidate my entire structure would be for the market to break below this wave 4 area. So if we get price action to come below 142.83, then no, I would say would be we can consider this entire movement higher to be completed, and we'll be looking for a pretty strong sell-off out of the market, potentially back into the 137 area. So even as it stands now, we would still be in for a very good risk to reward ratio, even if we should wait for the market to get below this low. As here, if that's ideally the top of the market, and we're looking for price to come all the way down here, you're still looking at a risk to reward ratio that is greater than 2 to 1. Right? So we are still within that zone where it's best to wait for the market to complete its overall move or to confirm its decision to us. So as it stands now, I am simply monitoring the price action here for pound yen. If this is indeed wave A, then I'll be looking for a 50% retracement out of the market. 50% takes me right into this area of interest. We can delete this one. And it would be right within this level here. And from there, we can also see where the market would have been holding firm to this trend line coming from the higher time frame. So we could very well get the market to come down into this area and then move higher. It's all about observing now to see just how price would actually react. So there's two paths where the market could take here. We're looking at movement, potentially further decline out of the market where price could break this area, come down and confirm ourselves. Or we could get where the market revisit this area and then push higher. So these are the two outcomes that we're looking at. So ideally, for either one, we're still anticipating further decline in pound yen throughout the day or potentially throughout the week. So with the area of interest is about 143.60. Right, so within that zone, so we're still anticipating further movement lower for pound yen, right? But it's based on where the market go once it finds itself into that 61.8 zone. All right, so that's really what we're observing. All right, so for this week, it's really pretty much a slow week in terms of how the market is moving and how price action is unfolding. But it's best to observe, sit on your hands, and not to jump and be too hasty to trade. For dollar yen, this is what we had in the market for last week. Well, not last week, but yesterday, Monday. This is what we were anticipating. We would have identified where I called out. I had called out this trade last week, where we're saying that this movement higher, and I shared this with you guys in the trading room, to say that in this zone here, we're looking for wave 5 to complete at that stage. But if we looked at it and dissected it properly, we would have identified that this overall movement in here was a part of an ending diagonal where we had ABC 1, 2, we have that ABC again to give you 3, we have wave 4 coming in, and we're looking for that ABC to give us wave 5 to finish off that entire structure. Initially, I had labeled this level as the top of the market. But when we saw price potentially pushing higher to finish off this entire move, we were looking for any movement lower here for sells. The market retested that zone and then even created a new high. So we understood immediately that that overall structure was still unfolding. Once we got this movement here, market pulled down, we were able to label here as the top of the market. And wave A, then we now look at structure coming in to give you wave B. And wave C, generally a 5-wave move down. So we're looking at 1, 2, and 1, 2, 3, 4, 5, potentially to give you 3. So we are seeing where the market is likely to push lower. But one thing we want to look at is, and I'll take this to the 4-hour time frame just to provide a bit more clarity, is once the market finished off its move here to give us wave 2, coming out of that long decline, right, that we identified. Now, I'd share this both in the exclusive trading room and also in the free trading network as well, is we were anticipating for price to come out of its overall move here and to go long. And I call that trade as well. right? So we were able to capitalize on this massively, right? So we called our first position out of the market at this zone. Price created a 5-wave move up, corrected to give you wave 1 and wave 2. Now we have a minor wave 1, minor wave 2, and we also now have 3, 4, and 5 completing that cycle. Now, what we are observing at this stage is to see whether or not this 5-wave cycle here is a third wave of wave 1 of this overall cycle. So are we getting the third wave here? And this correction will be wave 4, and we're looking now for wave 5 to finish higher. Right? What would make us on R? Is it a case where this 5-wave structure in here is only a first wave extension of wave 3, and we're looking now at wave 2, and we're looking for the rest of them to come in? We don't know these scenarios, but all of them are quite possible. So how do we play this, or how do we go about this? First thing we have to do is to highlight the top of wave 1, which is what I've labeled there. All right, so this level here was to highlight the top of wave 1. Based on the principles of the market in terms of how any form of impulsive move should play out, wave 4 cannot enter in the territory of wave 1. So we now know that this level here, should the market get lower into this zone, we can no longer, we would have confirmation that it is not wave 3 here, but instead wave 1 of an extended wave 3. And that's pretty much what we'll be anticipating. So while I was indeed looking for the market to finish off its move in here, what you could do in this situation is to use this level as a top of wave 1, and let me just highlight it red for now. All right, this being the top of wave 1. And what we're simply doing is, if that's the case, we could actually take a small risk here in terms of if the market gets back above this zone. And let me just walk you guys through this one. You would have had wave A, wave B, and potentially wave C to fall lower. Out of wave B, we would need 5-wave structure, where this is 1, 2, 3, 4, 5. From here, just by looking at this, we can see that wave 3 certainly not the shortest move. Wave 5 in this case is the shortest. So we know that this overall move is valid as a 5-wave impulsive move down to finish wave C. So how do we read this? We can say that we can potentially look to buy at this stage. That's our first buying opportunity. Because the market still has some form of move, because we're still predominantly in an impulsive move down, because this overall move here is an impulse, and we could get what? Impulse, correction, impulse. You could take a small trade at this stage and not risk too much by placing your stop loss exactly at this point, right? And if you place your stop loss exactly at that point, it would simply means that wave 5 and wave 4 cannot enter into the territory of wave 1. So if that is what you're looking at, then all you would simply be understanding at this stage is that you are simply in a position where you can quickly eliminate all losses or cut your losses short, because you now know that this overall move is likely to continue lower. Because you would have been looking now as not reading here as wave 3, but reading this as wave 1. And wave 2, if that's wave 1 of wave 3, then wave 2 could easily find its way back down lower. Now I know this may be confusing at first, but it's all about following the simple rules, all right? So all I'm simply doing at this stage here is anticipating what the market would do at this stage. And if that's the case, then here would become the level where I invalidate my entire setup. And I would now be looking at holding on to this trade even higher. So this is another trade setup that I would be looking at. As we will have completed the 5 waves down. So we have wave C completed. Just to monitor now to see how this market would react. So I would be long on dollar yen, and I would simply be holding on to my target and waiting for this market to push higher. Right, if the market invalidates this entire setup, then I would simply reassess and look forward to executing another trade. But at this stage here, I am not risking too much in order to prevent me from taking this trade. The upside is very healthy in terms of a higher probability. And we have simple rules that we can utilize to invalidate the overall structure. Right, so that's one thing that I will be looking at for the remainder of this week. And that's for us to long USD yen. Next on the list, we have gold. Now, looking at gold, again, from a 4-hour perspective, we find, and I said, and I shared this with you guys last week as well, they say that, and even what happened is that as we were here looking at this movement last week, we saw where the market continued to decline, taking out a couple of the lows that we were watching, especially the one at 1800. And I'm saying that next low that we want to be looking at is this here at 1760 or 1764, right? Because based on the higher time frame on the daily, we would have completed wave 4, right? And we're looking at this level as potentially wave 1, and the market completing its 3-wave cycle A, B, C to give us wave 2. Now, what's interesting about this movement out of the market here is we need to see price breaking above this zone, and that would confirm any buying potential. Why? Again, after a 3-wave cycle, wave B is that area of interest for us. As it stands now, we have 1, 2, 3, 4, 5, 6, 7. 7 moves up. And remember I said 7 moves are generally in terms of a correction out of the market. So even here on the 4-hour time frame, we can look at that. And if it's a correction, then we can label that correction A, B, C. So what do we need to see now? Again, this would be wave 4 here. So there are 2 ways to read this. We could get the market to break below wave 4. And that would indeed confirm us to start selling. That's one scenario. Or if this is indeed an impulsive move coming higher, we would need to see the market creating a new high for us to consider this as an impulsive move. And if it creates a new high, we need to see price staying above this zone. So we can also label here. Let's highlight this level. And why am I highlighting that? I'm simply doing this here because, again, if we get price to push higher without re-entering this territory, we could label here as wave 1, wave 2, and you would have smaller wave 1, 2, 3, 4, 5 to give you 3, 4, and 5 would come in to give you the first cycle up. All right, so that's 2 things that we have to be looking at. If this is indeed a part of a correction and we are seeing where it's holding firm to this upper trend channel here, with this level here acting as resistance, if we should get price to break beneath this low, then we should anticipate for the market to get further down and complete. This level would now be Y, here would be X, and we have A, B, C, and double X and Y coming in here to give you wave Z. I know again, maybe confusing at first, but once you understand price action, then it would start to make sense as you progress. All right, so this is ideally what we'll be looking at. And I just simply utilize my method of analysis, which is Elliott wave, to help me to identify these potential outcomes. So this now is an area of interest for me. Looking at it from the 1 hour time frame, it certainly fits the bill of having a correction in terms of here. This certainly looks more like a corrective structure than anything else. So we can say that A, B, and 1, 2, 3, 4, 5. This looks more of a correction than anything else for me, guys. So what I would be doing in this situation is looking to sell once the market gets below this low. If you look here, and highlight this level as the top of that market, I'm going to call a trade on this one for you guys while I'm here live. So it's wave 1. It's 1, A, B, C. This is 2. This is 3, 4, 5. And what we have in wave 5, we have what seems to be an ending diagonal in here. 1, 2, 3, 4, 5. This did not come below wave 2. All right, so this is what we have here. And if you guys want, this would be a confirm sell. Invalidation. So there, overall, this entire structure is bearish. And I can actually confirm that based on what I'm seeing here on the 1 hour time frame. Right? Now there are two ways to this. We can either wait for the market to come here, which would give you strength for this, and you'll be targeting down here. And that's still a nice risk to reward, greater than 3 to 1. Aggressive entry. And that aggressive entry would be taking you from here. Risking a little bit less, you'd still target these lows. Understand, create growth. Right. So we have taken the market. The market where here. And let me know if the audio is coming through again. Guys, sorry about that. So if you're getting audio, let me know. And like I said, I was calling this trade on gold. If you're still able to hear me, I was calling this trade on gold. And as we are looking at the market now, we indeed have price confirming our overall bias as we speak. So let's see just how this structure would actually play out for us. All right, so if you're getting audio, just drop a 1 in the comment. And as you're able to see now, as you're live on gold, you're seeing where the market is confirming the setup that we have and observing to see just how this entire structure would actually play out. Now we are able to input a small risk to reward ratio for this entire structure based on where we had the entry. And now we're just monitoring here to see just how the market will move. What we need to see now is price breaking lower than where we have our confirmed entry. And that's what? 1829. So once the market gets below 1829, we can say that we have a confirmation of our overall bias to go short. And that's really what we'll be looking at. So this is a nice trade setup as it is. There's nothing much to get excited about at this stage. We just want to see the market confirming those sells for us. And we now can look for the X wave. We can cut on this C. This now ABC would be an X wave in here. And now we'll be looking for Y to complete. All right. So it's really about monitoring this price action now just to see exactly how price would react to this entire structure. All right. So that's one that we were able to call for you guys live. Let's finish off this. Let's see if we can finish off this entire movement here and observe to see what is taking place on EuroCAD in the meantime. Now, EuroCAD, we had a different situation playing out where we have on the market, and let's see if we can take it back to the 4-hour time frame for more clarity. And on the 4-hour time frame, we were looking at this overall triangle pattern completing. And from this triangular pattern at wave X, we were looking now for the market to complete a 3-wave move down to give you wave Y. Wave Y generally unfold in 3 waves. So we're looking now at A wave being completed. We have the ABC coming in for wave 3 for B. And what we're simply looking at now is for a 5-wave structure to finish off wave C. In that 5-wave structure, now that we have context of what we're doing, we can look now at the 1-hour time frame. In that 5-wave structure, we have, let's just make this a bit better for you. All right, so we have wave 1 finishing, wave 2, we have wave 3, which extended. Wave 3 ended all the way down here. And let's look at how the market actually extended. We have 1, 2, and the market created first wave in here of that extension. 1, we had A, B, C to give you 2, and the market completed a 5-wave move down in terms of 1, 2, 3, 4, 5 to give it 3. Wave 4 ended here, and we have wave 5. Now, in that 5-wave movement down, all of that was just the first wave of wave 3 extension. And in that first wave, we had what? Wave 1 as an expanded leg. Then we have wave 2 coming in. Then we have wave 3 finishing off here, 4 and 5. All of that giving you the 3rd wave of this entire structure. Now, when we look now at wave, can delete some of these because these are information that we're using from last week, and the market, we would have been out of that trade already. the market has invalidated couple setups, right? So we have now where this entire structure is moving higher. So after an impulsive move down, we're looking for what? Correction. A, B, C. If the internet drops again, guys, I think we'd have to just call it a day and apologize for now if the internet drops again, because I'm getting an unstable internet connection here. So if it falls again, we just call it a day, and I'll just complete this and I'll just share it with you guys in the trading room and also in the free network. All right, but let's just continue just to see while we have proper connection now. All right, so this is really what we're looking at wave A, B, C. And we're anticipating now for wave C to finish off in the 38.2 zone, because that's generally the area of interest for wave 4, right? When the market ended coming out of wave 2 to wave 3, that retracement is generally within the 38.2% area, right? So that's initially what I had anticipated here for EuroCAD. Now, in that, utilizing that same information, utilizing the same information, I am now looking to say that if this is indeed wave 4, then we can now confirm our sell should the market get below this zone. Because here we would have A, B, and we're looking now for wave C. If we want to get a bit more clarity, can draw a channel between wave A, extend that, and the market generally corrects within this entire channel. And we have that taking place here. We overshot that channel just a little bit, but that's completely fine. We can say now that we potentially have wave 3 there, wave C there. So we can label this area now as wave 4. I was anticipating that retracement from yesterday, didn't get it, right? But now we have something to work with. We can say now we're looking now for wave 5 to finish. And the entire structure that we're looking at for the market to revisit about 150, about the 150 zone. And we have the target point coming in from the 4-hour time frame. So this is ideally where we'll be targeting for wave 5 to finish. All right, so we have a strong enough target point to highlight, and once we get below this confirmed sell, then the pivot high that the market would have created where we have wave 4, that will become our area of invalidation. So in this scenario, should the market moves down here and breaks below this low, then all I would simply do is to highlight this level. And that now will become the area that I use to invalidate my overall setup. But as it stands now, there's nothing for me to do because the price could still push higher. And we don't know what the market is going to do as yet. But all we are simply waiting on is for price to confirm lower. Euro NZD. This is a trade. This is also another trade that I was in. Well, still in this new position where I entered yesterday. Market is currently in a drawdown now. But how did I arrive at this decision? And again, taking it from the 4-hour time frame, we're seeing where the market has completed 4 waves out of that entire correction. And that correction, we're looking at a B wave. Wave 4 we're looking at wave 5 to complete. And wave 5 is taking the shape of an ending diagonal. And we have wave 1, wave 2, 3 being completed, wave 4 entering into the territory of wave 1 as it would in an ending diagonal. And now it's simply looking for wave 5 to finish off. So from this stage here, I had highlighted this overall structure as A, B, C. And based on what is taking place here now, I cannot consider yesterday at the time when I executed this trade. Let me just hide this one now. At the time when I executed this trade yesterday, I was looking at this overall structure to be an impulsive move. So we would have had what? Impulse, correction, 2, 3, impulse. So out of that now, we can read this entire zone as well. We can say we have wave 1, wave 1, wave 2, wave 3, 4, and 5. And that now would have completed what? The first move out of that entire structure. We are now looking at wave 2 of that bigger degree now to come in. We're looking now for wave 3, 4, and 5 to finish off. So if this is wave 4 that I'm looking at here, and this is the first impulsive move down, this being the correction, wave 2 cannot enter in the territory of wave 1. And if that's the case, then my overall count would have been incorrect. Hence why I'm able to put my stop loss where? Immediately at wave 1, not a pip higher. Because the market, once price gets to that level, it would have invalidated my entire wave count. So I'm still holding on to a short position for this trade. Currently in a drawdown, but we're seeing where the structures, as it remains right now, the structures are still holding firm. Right, so it's just about monitoring this to see exactly how the price would actually react. All right, this is Euro NZD. All right, now to look at Euro GBP, and I look at the daily time frame. There's a lot of stuff here. I'll just remove them. Now, looking at Euro GBP from the daily time frame, we're seeing impulse, correction, correction. That's all we're getting out of the market. And if you want to break it down more, you have wave 1, wave 2, wave 3, 4, and wave 5. So you have your 5-wave impulse there. This level will become your area of invalidation. So as it is, still holding that the market is potentially moving higher. but we are looking at this overall correction here. And what we have is a sideways corrective structure that's taking place. And this is just to look at Euro GBP for naturally candid. And so we have a wave coming in here, the market creating, let's say that this was a high to give a B wave, and now we're looking now for C. First thing we can do is to take our channel, potentially identify where that market channel would come in. And these are the levels that we are anticipating. First and foremost, from the daily perspective. Next idea that you want to get in terms of your projection is if wave A is equal to wave C. And if wave A is equal to wave C, and one target point would be there. So either way, we're still looking for potential decline. If what we have now, so we have potentially here at the end of the channel for our target, and also wave A equaling wave C as another target. If this is wave B at this stage, we can do a quick labeling. So we have A, B, and we're looking for C. From B, we're seeing another movement down